Good morning, Steve Freed in Chicago with the morning grain comments. Well, happy Friday to everybody, and hope everybody has a safe weekend. From a weather standpoint, it looks like most of the U.S. hard red winter wheat belt will get some rain next week. 3 separate events could add up to general coverage of a half-inch of rain. The best coverage probably in parts of the southeast Oklahoma, northeast Oklahoma, and southeast Kansas. There you might see anywhere from 1 to 2 inch rains. When we look at the 8 to 14 day map, it looks like most of the Midwest will see dry weather, which is good for finishing the corn planting. Still have some cool temperatures, but they're behind this rain event in HRW. There is a ridge of high pressure, and we'll see just how long that ridge develops and how it impacts the hard red winter wheat crop. Before this rain event, people were taking the HRW crop down 70 to 100 million bushels from earlier estimates. Down in South America, Brazil is getting crop-making rains in central Brazil. Europe is fine. There is a little bit of dryness in parts of Urals in Russia, but not a concern at this point. Spain and Northwest Africa remains dry. Conditions in China and India are mostly favorable, but there is some concern when you talk about sugar and cocoa about some too much rain in India down the road that could either slow harvest or cause some damage to crops. As far as the beans are concerned, soybean market has dropped from $15 down to a low of $14.54. Most of that decline, I think, has to do with the big Brazil crop and the fact they don't have storage for it. Farmers are forced to sell, commercials are forced to sell, and that brings the Brazil price down. China demand for beans continues to be on the rise, but mostly buying Brazil. Also some concern about meal demand, and also some concern that we still haven't seen the biofuel production and demand in the U.S. that people anticipate, which is bringing board crush margins down. We also note that Ukraine crops and soil seeds look to be higher than previously thought, so that offers some resistance to global vegetable oil prices. Over in the corn, July corn has dropped from 647 down to support near 620. I think there was some farmers selling post-USDA report. It looks like mostly favorable crop conditions here. Our export numbers were disappointing this week, while ethanol demand is on the rise. So I think that we're still seeing strong basis levels, inverted futures markets, and so I think the market has cleansed itself out of the post-USDA rally and now is near key support. The Argentina is talking about lower corn exports. Still uncertainty as far as the Ukraine export corridor deal. In the wheat, besides the weather in the U.S., we've seen Chicago wheat drop from 717 to support at 670, KC 886 down to 820, Minneapolis 895 down to support at 850. Most of this has to do with liquidation of a weather premium out of the United States, and also lower prices in Russia.